Hey, you guys, so I'm going to give you three stocks that I want you guys to watch this week and to just simply keep on your radar. I want to take you to the charts and just quickly give you guys a run through of what I'm looking at and just some levels to keep your eye on and exactly why I pretty much came up with these levels and why I'm even interested in these three. Now, they are low barrier for entry, okay? You don't have to pay a whole lot to get into these trades, especially if you're going a week or maybe 2 weeks out on your expiration. It won't cost you that much, but of course, do what works for you and your account. Now, the very first one we're going to look at is Disney. Now, we all know what's been going on with Disney as far as the boycotts, them canceling Jimmy's show, and just boycotts towards Disney Plus and other networks and services that are owned by Disney. We've seen that. Now, even though they've welcomed Jimmy back on to air the show, and still a bit iffy on the boycotts and people still keeping their subscription canceled, okay? They did push back up, but during these boycotts, they were holding strong above that 111 level that they've been holding since August. And I do mean strong. They went from 111, pushed back up to 113, okay? But what I want you guys to take note of is the fact that they are rejecting on the 200 EMA at the bottom. It's 200 EMA is acting as a level of resistance right now, which is about 114. Okay, so what I wanted to see is if we got another rejection there and push lower, or if we continue to wedge a little bit and then finally get that breakout to retest that 111 level. Now, I'm looking for the breakout, possibly outside of the pennant, to get in, make my move, and get into puts to ride back down to 111. Or we get to 111, we continue to hold strong there as that support level, and then ride it back up to 113, 114, where it's rejecting up there under that 200 EMA. Okay, so that's just something to keep your eye on and to continue to watch and see what happens. Now, if it does finally break below that 111, we can definitely expect this thing to go further below and test that 108 level. So there are a few opportunities here for a trade on Disney. So keep them on your radar. Second one is Lyft. Now, if you're in my Skool community, you know that I released a Lyft trade plan that played out really, really nicely. Okay, so as of right now, they are holding above that $21.23 level. Okay, a nice support there, but we have a small gap down here from 2051 to that 21.23. So what I want to see is that Lyft can break below 21.23, retest that 2050, fill the gap, and then push back up. I will be looking for a potential entry around 2051, getting back up, and then having a target at about $23, whereas I would look to hold this for about 2 weeks, 3 weeks maybe, to give it time to make its move, okay? And so even if we do retest that 2153 and we don't break below that, and it makes its way back up to like that 2285, 2345, I will look for some rejection there to potentially then come back down and see what we can make shake on, filling that gap. Okay, so keep those levels in mind, but I'm definitely wanting to see that gap filled, get into longs and ride it all the way back up, and then see what happens there, potentially breaking and pushing above 23 and making its way higher. All right, so keep Lyft on the radar. This is on the 4-hour time frame. All right. Now, the last and third one will be Starbucks. Now, Starbucks is looking to cut, I think, over like almost 1,000 corporate jobs, as well as closing a number of stores as part of their corporate revamp strategy. And so if you look at the 4-hour, as I have here popped up, you will notice we have ourselves a bear flag. You may even look at it as a channel, but I'm seeing this here as a bear flag. Okay, it's already has a breakout and making its way down. Now, one of the things with Starbucks is that it's rejecting off its 50 EMA on the 4-hour time frame, and so it rejected, pushed down, got a light breakout there. But even though we've already gotten that breakout, I had a target at 81.31 down at the bottom. We kind of had a little tweezer down there, and that thing rose all the way back up, but we still have some room to come down. So depending on how this thing plays out today, I would mind potentially looking for some sort of entry at around maybe $83 and then riding it down to 81, or a more safer entry and getting in at about 81, making sure we hold up there, waiting for that confirmation, and then riding it back up to that 83 and 85.52, which is right up there at that 50 EMA. Okay, so this one is a very, very simple play, very clean cut setup, but because the breakout has mostly already taken place, I may wait till we get down to that 81 to enter and ride it back up to kind of have a more of a safer play there. Okay, but even though at that 83 to 81, still a nice ride down there to kind of play out that full bear flag that we're looking at, but 81 could be safer. It all depends on you, your risk tolerance, and how confident you are in the play. Okay, so those are just 3 stocks that I want you guys to watch this week that don't have, extremely expensive premium that you can get into and catch a small move, maybe a slow burn move, but nevertheless a move. Okay, just make sure you have enough time on your expiration to let all 3 of them play out. All right, so with that, I will see you guys in the next one.